Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 25th of June, 2015, and Friday, the 26th. Here's a look at the ES. This is the daily chart. This is the front-month futures contract on the S&P 500. We see it every day. We look at it. It is the broad market. We have been obviously in this very horrible range now since basically last November. And I say that just as a reminder that, that horrible range, at least in December and January, there was some volatility, a little bit of February as well. But ever since then, using that blue line at the 2062.50 level, we have been going collectively nowhere. Less than 100 points of range for the full 4 months now, actually more than that, 5 months. And basically stuck for most of that in about a 60-point range. We hit the high of that 60-point area, generally speaking, is the 2120, and we hit that on Monday again. And then today, that's after having last week hit back at the 2062.50, the blue line. And then on Wednesday here, we rolled back over. So still in the range. Same thing's happening over and over again. Here's a look at the S&P Cash Index, lost 15.5 points. Obviously looks about the same. Here's the NDX. After sweeping essentially almost to new highs on the index, not quite, but near new highs, lost 24 points for the day. We'll look at the intraday action here in a few minutes. We got the stocks down 7, under the 10 EMA once again. Biotech's down 62. I pointed out that 13 seeker sell signal the prior day on the biotech index once again, just like we got one back in April. And so far, that's bringing the market in. Remember the old story, as go banks and biotech, so goes the market. So biotech's heading down, market heads down too. A lot of it might be because of this 13 signal right here that you're looking at. Google, therefore, lost almost 5 points for the session. It was nearing the high of its range. Apple actually gained a buck, although it was up higher intraday. The VIX climbed back up. We talked about how low the VIX had gotten. It was one of the lowest closes of the year on Tuesday. So now on Wednesday, a little bounce as the market comes in. Gained 1.15 there on the VIX. Crude oil closed basically at $60, $60.20. Gold was flat finally after a couple days down. The 10-day moving average of the trend, after dropping a low number off from 10 days ago or 11 days ago, is up to 1.24, but then we're about to lose a couple of high points over the next 3 days. So that should bring that back down as well. NASDAQ volume, really poor, 1.5 billion shares. And frankly, going into the last 10 minutes of the day on the NASDAQ, we were only at 1.3 billion shares. So they printed 200 million extra in the last 10 minutes at the close. Otherwise, this was going to be pretty weak. So what lies ahead? First, let's take a look at the intraday action so you can see it. A little more interesting. We certainly had some better trades today. It was a better day for us than the first 2 days of the week, despite the low volume. You can see the gap down, and then the ES was very flat again for the first almost hour. Then a little spike up just to fill the gap. There's your technical gap fill action. Then rolled over, and we were right at the opening level, a little bit lower heading into lunch, and then we actually dropped over lunch. Got a 13 Comer buy signal late in the lunch hour. That creates the pink risk line, which we then bounced off essentially 3 times before finally cracking in the last few minutes of the day and closing at the lows of the session. NASDAQ side is the NASDAQ futures, pretty much just the same, although it was a little more positive in the morning where it reached up to new highs, but it still ended up closing pretty negative and near the lows. So hopefully that means, I'd love to tell you this means the start of something to the downside. We've been waiting for it. But obviously with us still in that same range, it's really hard to get too excited yet without the volume. Wouldn't be surprised, obviously, if we're heading back to that 2062.50 level on the ES. That's our favorite cosmic number right now. Data coming out on Thursday. Initial and continuing claims, that's the weekly jobless numbers. Personal income and spending and PCE prices an hour before the bell. The natty gas inventory is an hour into the market. We don't do market previews for Friday, so this will be the last one of the week. Friday, we do have Michigan sentiment coming out 30 minutes into the market, or whenever the kids get up, as they say. That's it. Next week is end of month, end of quarter, end of first half of the year on Tuesday. So Monday and Tuesday could be a little light as the statements, usually they want to have the stocks already about where they want to print them for end of month quarter statements. And we'll talk more about next week. Don't forget, next week is also a short week. Friday is the observance of the 4th of July holiday, which is actually on Saturday here this year. So we have a short holiday week next week. We head into July. July is a month where sometimes you get some pretty decent moves. You don't have to have the volume to do it. Obviously, a lot of people are out for summer and whatnot, but it still is a month that tends to move fairly well. So be interesting to see if we can finally shake this once they've printed those statements for the end of the quarter next Tuesday. Charts, as usual, brought to you by eSignal. If you have not taken a trial of our services, feel free to do so. We will help you out for a couple weeks. And if you do find these videos useful, please like them on YouTube. It does help us out. Have a great trading Thursday and Friday. You will hear from us this weekend.